Good day, YouTube. My name is Colin, and today we're talking about 3 stocks that I am most excited about for December 2017. Alright, thanks for tuning in. One thing I want to address real quick is why I sound so freaking weird. It is not the audio equipment this time, I promise. I know people have commented in the past. I was trying to use or get this stupid lapel mic thing I bought on Amazon to work, and no matter how many things I adjusted, and I thought it would sound good on the video camera when I shot it, and then I'd upload it after doing a whole video, and then it would just sound different, and it was just frustrating me. So I got rid of that, or I still have it, but I finally stopped using that and got myself a decent shotgun mic, and I think it sounds a heck of a lot better. But it's still distorted right now because my voice is actually shot. I was getting over this whole strep throat, ear infection type thing, and I'm on antibiotics and all that, but I'm now to a point where I can actually talk without it being extremely painful. But my voice still sounds a little funny, so apologize about that. That's the issue. I can't help it. I'm sorry. It's just my voice box this time. I know what you're probably thinking. Will this guy just shut up and get into the stocks? So here we go. First off, let's just talk a little bit about how my past picks have performed, because I know everybody wants to see that. So let's just flip around to a couple charts. Okay, so we're starting off with the 2 that we added back in the October edition. We have the orange line, which is Delta. As you can see, that one's gone up a little bit, came back down a little, and we're currently up modestly around 3 to 4%. The blue line here is Google, which has been a beast. It's up 13%, with the biggest jump, as you can see, late October after they reported their quarterly earnings. Next, moving on, we got Facebook. Added this one last month, up around 7%, which is great. I did want to highlight one thing here with that little red dot, and that is their quarterly earnings and conference call. Okay, so let's talk about what happened with that earnings report and conference call. As you can see, it looks like the share price goes straight down right after that event. But a closer look, what actually happened was, so the earnings report came out about an hour or so before the conference call. And when those numbers came out, they looked phenomenal, okay? Monthly active users shot up. Revenue and earnings, all that looked great. I believe it was 1.28 analysts had them at, and they reported 1.59, just shy of 1.6 EPS. All that looked great. Financials were awesome. Stock price shot up like you might expect it would. However, an hour later, we get the conference call. And in that conference call, Zuckerberg got on the call and started addressing what had happened the day before. I think it was the day before, which was where he was called into Congress to testify. Him, along with a lot of other major social networking platforms, were questioned about how they allowed Russian hackers to get in and make false posts and ads and news stories to try to inhibit or affect the U.S. presidential election in 2016. So because of all that, they took a lot of heat. And Zuckerberg got on the call and he said, we're going to try to really hone in on our security. We're going to cut out all of the bad actors that are going to come in, that have been coming in and trying to make fake profiles. So we're really going to enhance our security measures no matter what, and we're going to open up the pocketbooks to do it. And right after he got off that call, it was kind of quiet, and then all of a sudden you saw the share price just start to drop, and then it went in the red. And obviously investors, it appeared as if, to me, when I saw that happen, because I was on the call and I was watching the share price, and it looked like people were unhappy with that statement. But I think any long-term investor, my take on it is this: any long-term investor wants to hear that. Okay, why is Facebook successful? Well, Facebook was not always the number one social networking platform. Okay, before Facebook, you had Friendster, you had MySpace. Okay, MySpace was way bigger than Facebook. Okay, MySpace had the bigger network. Facebook never should have gotten as big as it has. The reason it got so big is because MySpace failed. All right, MySpace, for those of you who never had a MySpace profile, at first it was like, okay, cool, you can connect with your friends. And then slowly you just got more and more spam. You'd get all these fake people that were adding you it was just like fake profiles, and you could tell it was just like scammers and weird stuff that, and fake. It was obviously fake spam that you were getting. And so a lot of people stopped using the platform. They just got sick of it and just started using Facebook, because you didn't have that with Facebook. Facebook always was a lot more safe. It seemed a lot more secure. And it just, the integrity of the platform has always been higher. So because of that, that's why Facebook has been successful. And the continued philosophy that you need to invest in the platform and make it more secure is what's going to keep Facebook being successful. So I absolutely think Zuckerberg said the right thing, and I'm extremely happy with their commitment to bettering the platform by, even at the expense of short-term loss, to make a better platform long-term. I think that's the right move. So that's a little bit about that. All right, so enough about last month. Let's get into this month. I'm here. I'm rocking with, in case you're wondering, it's my favorite festive holiday sweater to get in the Christmas spirit and start talking about what I'm excited about for this month, which is going to be December 2017. What stocks do I love? Let's take a look. So the first one on my list that I'm going to keep, it's going to be, and I was kind of on the fence about this one because the stock price has rallied so much recently, but at the end of the day, I still think it's a fair price, and that's going to be Google. I'm not going to rehash a lot of the same stuff I talked about in the last video because I did quite a bit of extensive analysis in my previous video. I am going to give you a little quick summary of some charts and just kind of get you a little bit up to speed and just kind of refresh you a little bit about what I talked about. So let's flip to that real quick. First thing we want to touch on here is, as you can see with the revenue growth, Google is a growth company. We are consistently seeing growth on an annual and quarterly basis in revenue. Next, we'll also see here that net income is also growing with Google. So quarter after quarter, year after year, as big as this company is, it is still a growth company. Now, next we're going to look real briefly at some highlights from the most impressive part probably about this company, arguably, is the balance sheet. You're seeing a massive amount of cash that's just getting bigger and bigger every year, getting close to $1 billion. And now we're going to look at the short-term debt, which in relation is just tiny. You got what, 3,000 million, just nothing compared to the amount of cash. Here you're seeing where it's actually crossed that $1 billion threshold and the most recent financial report. So this is definitely a company that can handle some hard times. You do not have to worry about the security of this company. Now, with all this being said, Google has came up in price over the last couple months. So we do need to start looking at the PE and seeing if that is still fair. And as you can see here, I do think that this is still a good buy. The forward PE is coming back down into the 20s, which in today's market is great. When you're seeing companies like Netflix and other tech companies up there in the hundreds, this is definitely a reasonable price to pay for a phenomenal company that's got great growth and just so much potential to just be huge. So there you have it. Google, beautiful company, great balance sheet. Now, as I mentioned, they reported earnings late October, so these numbers have not changed since the last video. Unlike my other two stocks, which are either one of them is a brand new one, and the other one has updated earnings, so we're gonna have new slides with those ones. This one, I just want to kind of summarize why I loved it. If you want to get a little bit more in-depth analysis, I invite you to check out the video I made for November. I'll link to that at the end of this video. That gives you a little bit more of a rundown. Like I said, the numbers have not changed because they have not reported earnings since October. So, with all that being said, Google is probably going to be my third favorite of the three stocks in this video. The next two I'm even more excited about, okay? So, I mentioned before, one of them is a brand new stock, one of them is a repeat stock, but I'm still loving it. And the repeat one I'll go to first, and that is going to be Facebook. That's right, the social networking Goliath, Facebook. We talked a little bit about what happened after they reported earnings last month and how Zuckerberg responded, which I thought was phenomenal. Now, let's look at these updated numbers in a little bit more detail. So let's flip over and check out a few graphs I want you to see. Okay, so we've got updated numbers, but the story and the reason I love this company is pretty much the same. So we're just going to kind of give a summary of the concepts I talked about last time, along with the updated slides. Here you're seeing monthly active user growth continuing on a quarterly basis, as it always does. You're also seeing daily active user growth, again, quarter after quarter, always growing on a global basis. These are the people who log in every day. This is transmitting right down the line to revenue growth. So all that's looking healthy quarter after quarter, seeing that come up nicely and seeing the income from operations growing as well quarterly. As you can see, each quarter getting higher and higher. Same thing with net income. So top line growth leading to bottom line growth, something I always want to see with any company I'm going to invest in. Here we're seeing the retained earnings. So what they are doing with their money, and you're seeing growth in the cash and cash equivalents exponentially, which is just phenomenal. And with all this growth and all this increase in the stock price, you're wondering about the PE. But the crazy thing is, even though the stock price has come up, the PE is going down. In other words, the growth of the company is outpacing the growth of the stock price. So it's an even better value now than it was historically. So there you have it. Facebook, phenomenal company, tons of growth quarter after quarter, never ceases to impress. And not only that, but it's almost like the share, which is shocking in this crazy bull market we've been having the last few years, that it looks as if the growth of the company is outpacing the growth of the stock price. Because the stock price has been growing, but it's like the company's been growing even faster. So beautiful company. By far my favorite tech company, way better. I like it way, let's be honest, it's a much better company even than Google. Not to mention, they're getting into the video space. I talked a little bit about that on the conference call. Last month I talked about how like they'll easily incorporate things into their app, like with Craigslist, where now there is, local sales that are taking place right in the Facebook app. You now have a video news feed. You can click on the bottom of your app and it looks very similar to YouTube, which is a little bit scary if they start getting into that YouTube space, because that might eat into a little bit of Google. It's tough to say, but just the fact that they, with a platform that covers the majority of the world is on Facebook. That's not even talking about Instagram, Messenger, all the other platforms that they have. WhatsApp and all the other stuff they have. Facebook platform alone covers more than half the world. So to think that if they could just put in their platform a video feed, how much that could just take off. It's insane to think the potential of this company. And you combine that with the quarter after quarter growth, with the insanely good and fast-paced growing revenue and bottom line. It's my favorite tech company, hands down, as you can and I think you can plainly see why. All right, now there we go. We got our first two repeats. Now let's get into the third stock. This is going to be a brand new stock that I have never talked about before in any one of my videos, but it's something I've been looking into recently for a while now, and I really think it's something I want to start buying into, and that is going to be Vail Resorts under the ticker symbol MTN Mountain. This is a ski and snowboard Goliath resort company. So let's flip around and look at a few figures about this company. All right, Vail Resorts, some of the premier skiing and snowboarding mountain destinations certainly in North America, if not the world. First, we're going to look at a map, and I'm just going to point out some of the resorts that they own. They got certainly Vail, which is the flagship, which is like the premier place in Colorado, along with Beaver Creek, Breckenridge, and Keystone. You got Park City. You got some Heavenly, Kirkwood, and North Star, which are some of the best places in California. You got Stowey out east, Afton Alps in Minnesota, where you have so many skiers and snowboarders. And you have the premier place next to the Twin Cities, so you're getting a lot of clientele there. And what I'm pointing out to you, and the reason I'm showing you this, and what I really want you to get out of this, is that they are purchasing the premier places, all across the country in each region. So if you're really into skiing and snowboarding, you're going to try to get into a Vail Resort location. Okay, so at a given resort, you're going to get about half tourists and about half locals. So it's important to look at the population and the economy in some of these regions. Here we're seeing Colorado, California, and Utah, where you're seeing at or above average population growth year over year. Also seeing very low unemployment rates. All that is going to play right into the hands of these premier resorts. So good things we're seeing there. Next, I want to touch on some of the big things that are causing so much growth. Number one is the fact that there are no new mountain resorts being built across the country. It's been decades since they've built a new one, and they're just not being built. So all of the growth in the industry is going right into the current resorts in place. Also, because Vail owns so many of these premier resorts across the country, they're able to do so many effective marketing techniques, which they've been starting to implement, which have created so much growth. For one, they're taking, so say you're a regular in Minnesota and you go to Afton, which is the best place in the Twin Cities. Well, you get a season pass there. Well, now you can get a discount to go out west and go there for a weekend. You get used to skiing out west. Well, now you might come back there even more often and get a deal on a longer term pass out west. So they're doing so many interesting things they're doing to track and to market all these resorts because they have so many. As you can see here, this is the result. You're seeing year over year start growth in season pass units. We went from 25K to 75K in a matter of 5 years. Just phenomenal growth. And here you're seeing the revenue, which is also going up. So all that is great. You're getting those season passes and you're getting more money from it. And with the revenue, you're getting the earnings coming up as well, which is another thing I always look for. Also, extremely shareholder-friendly company. As you're seeing, they're sharing this money in the form of dividends with the shareholders, which is always something I like to see. And with all this growth, is the PE fair? It is relatively high currently, but with all this growth and with all this anticipated growth, we're seeing a forward PE down in the 30s, which I think is reasonable for an amazing company such as Vail Resorts. So there you have it. Lots to be excited about when you look at some of these numbers and some of these acquisitions with this company. But one thing I really want to harp on, and I don't know if I harped on it enough when I showed you those images, was the marketing efforts and how sophisticated this company is and how effective their marketing strategies have been. They've developed all sorts of ways to get more people, as you saw in those graphs, get more people to purchase more and more season passes. And they talk about this extensively on the conference call. I invite you to take a look at that on the investor relations page. But not only that, they're going out and they're purchasing the premier resorts, like the acquisition of Whistler, of Afton, of Stowey. These just happened in recent years. They're getting the best resorts in each region per se. So you're going to get the regulars. Say if you're out east and you go to Stowey on a regular basis, you're going to get those season pass holders and you're going to get them to try places out west by being able to market to them because they're already in your system. So a lot of really cool, sophisticated marketing techniques, a lot of really good growth. I think this is going to be a great investment to get into. Now, a quick summary of our stock picks for December of 2017. We have Google, we have Facebook, and we have MTN or Vail Resorts. If I had to rank them, I would probably go Facebook, then Vail Resorts, and then Google. But really, I think all three of these are great companies to invest in, so I don't think you can go wrong with any one of these. Now, I also just want to add, please, for God's sakes, don't just pick a stock because I said it. Please do your own research, for crying out loud. It goes without saying, but just want to throw that out there. Other than that, thanks for tuning in to this video. Sorry again about the voice, but I did the best I could to try to speak to you and get a video out. I kind of been in hiatus for a while, just trying not to die with how sick I've been, like a dog. But I'm coming around, I'm feeling better, so hopefully we can get some more videos out. Feel free to check out some of my other videos. Also, feel free to click that subscribe button and click the notifications if you want to get notified of some of my future content. I'm going to try to get some really cool videos coming out here in the near future. Other than that, thanks for watching Financial Success.